Hi everybody. In this video, we are going to analyze the business strategy and the marketing strategy of HUL in 2025. If you are, what you're going to cover is three things in this video. First is the financial results in a little bit of detail. The second is the product strategy of the company, how the company is organized in terms of different divisions, in terms of business product categories. And the third is the distribution strategy. Now, who is this video meant for? If you are a marketing professional wanting to get into FMCG, wanting to understand FMCG a little better, if you're a student looking at FMCG as a career, this video will be very, very useful for you. Let's begin. My name is Maneesh Konkar. I am a corporate trainer. I'm ex-ITC and we do a lot of work in FMCG sales and distribution training. And we also have online courses on the same. So have a look at, we're also a digital marketing agency. So we're generally in the world of sales and marketing. And what we do through such videos is to provide a lot of inputs to marketing professionals, sales professionals on how you could grow your careers. Let's begin. So I'm going to start with the Screener website, and on this website you've got this documents piece. So as I go scroll down, so if you search for a company on the thing, HUL is what we are looking at, and you go all the way down to these two particular sections, okay, namely con calls. What you have here is PPT and what you have here is transcript. These are the two, the PPT and the financial results are what we are going to look at. If you follow Screener can allow you to follow about 50 companies absolutely free. HUL is one of the companies that we follow. It's a fantastic organization going through a bit of challenge right now. And understanding what is happening in HUL can actually make you a much better marketing professional. All right. Okay, so let's begin. So the first document that we're going to analyze is the financial strategy of the organization. Now, this is the financial results document, which I sourced from Screener. You can also go to the company website, the investor section, and download this. All right, so I'm scrolling through a little bit down below to show you the overall financials. This is the overall financials of the company. So I'm going to increase the size and make it easy to see. All right, so audited results for the organization year ended 31st March 2025-2024. This is what you need to know, right? 61,000 crores has gone to about 62,000 crores, but this includes other income. So normally when we report incomes, we report it without this other income figure. So the company has seen about 1,000 crore increase in sales. If you look at the total profit for the period, it's hovering at about 10,644 crores. 10,500 crores divided by 61,000 crores means this company is operating at about 16% profit margin, pretty decent, okay? And that makes it one of the most profitable companies in India. All right, then you got some earnings per share data also. Now, this is the first parameter. Second parameter is the segment-wise results. So whenever we are learning about a company, when we want to analyze a company, the company operates in multiple segments or categories. The companies, okay, before we come to categories, it is structured in different segments. HUL operates in 4 different segments of the business. These segments are home care, beauty and well-being, personal care, and foods. Now, the rest of the presentation, we will talk about what are the different products in these particular segments. But here's the idea. The point here is that out of this 61,469 crores, which was the total non-other income revenues of this company, you have 22,000. The biggest segment is the home care segment. Vim products, think products like Vim. And you have the home care segment at about 23,000 crores. The second biggest segment is foods, which is at about 15,000 crores. Third biggest segment is beauty and well-being, 13,000 crores, and personal care is the smallest segment of the company. All right. Earlier, this used to be called personal products, PP, dates, detergents, things like that. Keep changing their terminology. This is where it is right now. All right. Now, what are results? This is segment revenue. Revenue is top line. results is bottom line. How much is the gross margins from this business? That is what you see. Now, if you analyze this business results a little bit in detail, you find that the home care business has gone up by almost 1,000 crores, whereas the foods business is just stuck 15,292 crores to 15,294 crores. We have seen a result increase of just 2 crores. And beauty and well-being has also seen an increase, but the personal care division, which is Dove, Peers, Lux, Lifebuoy, this has actually seen a dip. Okay, that's a little surprising. So personal care division is a little dip. Okay. In terms of results, you will find some different trends over there, and that's how we look at this entire piece. All right. So this is the second piece that we look at in a company, is how are the different segments in the business doing in terms of the sales and in terms of the profitability. All right. Now let's look at the third point. The third point is where we come to analysis of the balance sheet. And here I want you to look at two particular parameters. One is inventories and second is trade receivables. What are inventories? Inventories is physical stock that is lying in the company. And this has gone up from 3,800 crores all the way up to 4,100 crores. It's about a 300% increase on 3,800. That's about 7% increase. Not much, but you're seeing an increase in inventory. What is much more bigger is the increase in trade receivables. Now, what is trade receivables? Trade receivables, and we link this to a little different strategy in what they are doing in distribution, is trade receivables is the company sells to distributors. Here we have a concept called primary, secondary, and offtake. Primary is when a company sells to a distributor. Secondary is when the distributor sells to the trade. And offtake is when you and I go and buy a product from a Roman General Store or a Chandan supermarket. Okay? What is this number? This number is not secondary. It is not offtake. It is primary. Right? Now, if I put a lot of pressure and I dump stocks on the distributor, the distributor will many times say, look, I'll take the money, but then I'll pay for it a little later. Right? So the trade receivables is more or less steady throughout the year, but sometimes it can increase or decrease depending on market conditions. Let me show you what is happening on the trade receivables piece. This is something that you need to look at. And here the trade receivables of 2,700 crores has increased by 30% to 3,450 crores. See what is happening. The company's revenue is about 60,000 crores per year, which is about 5,000 crores in a month. The trade receivable last year on March 31st, 2024 was 2,600 crores, which means about half of the turnover in a month. 5,000 crores is the revenues per month, 2,600 crores is outstanding, which means the distributor was paying in about 15 days, half the month. That 15 days has gone up by about 30% to about 2020. This is an indicator of the kind of pressure that the company is putting on its distributors, and a little bit of market credit seems to have been given because of this. So trade receivables is what we look out for, right? This is it. Okay, so these are the 4 points that we cover in the financial analysis. That concludes part 1 of our video over here. All right. If you're liking this video so far, thanks a lot. And remember to pass on the goodwill to others, share this with your marketing friends, and remember to follow the channel. All right, now let's come to the product presentation piece. So the company is one of the finest brand builders in the market. This investor presentation details out how the company is doing in terms of its products and in terms of its distribution strategy. Remember, this is a marketing presentation. We're not financial analysts, so we've covered very briefly what is the financial results only from the point of view of marketing. So we saw that the trade receivables have gone up a bit, the inventory has gone up a bit, and segment wise, a couple of the segments seems to be facing a little challenge. The personal care segment is facing a little challenge, and the company could, okay, that's an opportunity for everybody who's trying to do business with this company. All right, so the operating environment is what is mentioned here. Now, in terms of product results, this is what we are talking about. What we are talking about is whenever you analyze a business now, these are the three things that we look at. We look at the underlying volume growth, we look at the underlying sales growth, and we look at the underlying profit growth. BEI stands for before exceptional items. Now, if you were a financial analyst and a stockbroker, you would look at the earnings per share growth also. But here is, let me explain this point in a little bit of detail. Um, how how do you what is the right rate of growth for a company? Is it 2%? Is it 5%? Is it 10%? Well, it's got something to do with the categories in which it operates, and it's got something to do with the economy in which it operates. So the economy growth rate is about 7% right now. India is growing at 7%. Now, if you are in, say, the river Ganga at Rishikesh doing river rafting, and during parts of that whole rafting stretch, you don't actually row, you're just moving around at the speed of the river. So if the river is moving at 10 kilometers an hour, and even if you don't do anything and you're just sitting in a boat in the river, the boat will move at 10 kilometers an hour. This is the economic growth rate, which is 7%, right? Now, within that, there are different categories that are growing at different rates. So there's personal care category, there's a foods category, there is a hair care category, right? Skin care category. These are categories. Now, your growth rate is to be compared to this category or economy growth rate. And by that yardstick, a 2% volume growth is a little on the lower side, and that's the first parameter. The second parameter is the sales growth. What is the sales growth? So the point is, sales growth is volume multiplied by selling price. Now, now we're talking about premiumization that is taking place in the market. If you see the automobile industry, you have a huge SUV shift that is taking place. I mean, 10 years back, 50%, 60% of the market was economy sedans, and now 55% of the market is SUVs. There is a premiumization that is happening to the market. So if there is a premiumization that happens in the market, the value growth will be greater than the volume growth. That is not happening. So the company is attempting a premiumization strategy and it's not working too well right now. So there's a 2% volume growth and an equivalent 2% sales growth, which means the selling price, average selling price of different products of the organization has literally remained the same. 1% and the profit growth is even less than the value growth, which means the company is under trouble, and raw material inflation and costs are something that is putting a little bit of pressure on the financials. All right. Now, this is how you look at the business strength of the company. Now let's come to second part, which is the product portfolio. So the company defines its products in terms of three parts. One is core. Okay, this is the core part of the product. This is a future core is what they talk about. And then they've got something called market makers. The market makers, and I will show you what all are these different things. So for example, the premiumization agenda is being played out in future core. Market makers is where they are trying out, for example, liquids. So Surf Excel liquid is a market maker portfolio, whereas a wheel powder will be a core portfolio. Vim liquid will also be a market maker portfolio. So this is what we are talking about in market makers. Now, to give you an indicator of how this company wants to grow, the focus is on shifting the turnover contribution. Now, see this point here, turnover contribution, TO stands for turnover, is to move towards future core, a future core and market makers. And the company has achieved that to some extent. There is a 2% shift from the core products to the future core and market maker products. 2% shift. 200 BPS means basis points. 1 basis point is 1.01%. So 200 BPS is 2%, right? There are various launches that are happening. This keeps happening all the time. Whenever you move into a launch and you launch a new product like a Lifebuoy, or relaunch the product through a 6P launch, you put more media spends in it. So enhanced media spends is what is there. Digital is taking place. Digital is attracting a little more of the spend than traditional channels. We'll see this in detail in the next 2 minutes. Yeah, here is where we see. Now see here. So portfolio transformation in future core and market makers. Bonds is driving double-digit growth, followed by 1,500 crore portfolio in high growth segments. Now see what is happening. What is happening is that more than 50% of total spends are going towards digital. This is a huge change from what it was about 10 years back. So in 2016, you would find that TV was about 42% of the total story, digital was 16%. There's print in between. Now, digital has gone from 16% to more than 50% of total ad spends. Um, you got TV that has dropped from 42% to just 28% of the market. More digital spends, more spends are going towards digital media. This is how the portfolio is transforming. It's transforming from powder to liquid to that's the premiumization of the category, and entering new demand spaces. This is the stuff democratizing liquids. This is what the company is attempting to do in its marketing strategy. It's working a bit, not too much, but I'm sure we'll see more action along these lines as we go along. So the 200 basis point penetration increase was what we covered earlier. Media spends, these products are getting a bigger percentage of the media spends, and the portfolio is being designed for the channel. All right, now let's come to the third part, which is the distribution strategy. And in the distribution strategy, there are multiple things that are happening. So the first point is, if you look at different channels, India remains the only country in the world where quick commerce has worked. Quick commerce is now a very small percentage, but general trade continues to be the biggest. So when we talk about channels, what are we saying? We're saying general trade is the channel, which is your mom and pop, panwalas, kirana stores. This is called general trade. Then there is modern trade. Modern trade is the modern format retail outlets, the large retail outlets. This is virtually a duopoly today, with Reliance controlling more than 50% of the modern trade segment and DMart controlling an additional 35%. So general trade ho gaya, modern trade ho gaya. Now you got e-commerce and now you got quick commerce. Quick commerce for this company. So quick commerce, which is Zepto, Blinkit, Instamart, and these three companies account for about 2% of total HUL sales. E-commerce is about 7 to 8%. And you got the rest. The general trade part continues to be the majority part. Now within general trade, the company is focusing on 1,25,000 specialty stores. A lot of cosmetics sells in beauty outlets or salons, and these salons provide a service. They buy the product from HUL, but they provide the service to the consumer. So there's a lot of this new category, this new channel that is important in the cosmetics industry. There is quick commerce is accounting for about 2% of the entire story. The company has increased by 40%. Its increase on its spends on influencers. That's a significant jump. Channels of the future, quick commerce is seeing a lot of assortment. The earnings call transcript also indicates that quick commerce is actually profitable for HUL. This is a rare thing. This does not happen. This is the most in most companies. Quick commerce actually loses money, and you're seeing a lot of gross sales value growth. GSV stands for gross sale value growth. All right. Over and above this, there is a big jump. This is a significant event. So look at this particular point here. 400 BPS, 4% direct value weighted distribution has gone up. Now here we'd like to link it to the trade receivables that have gone up. We saw the trade receivables have gone up from 15 days to about 21 days, and weighted distribution has gone up by 4%. Now this is the idea. The point is that general trade consists of A class, B class, C class outlets. C class are your top small outlets, B class is middle class, and A class are the top outlets which account for a majority of sales. Now, if you want to sell premium products, chances are that the premium products sell more in A class outlets. And this is where numeric distribution and weighted distribution play a role. So what is numeric distribution? Supposing I have 100 outlets in the market and I cover, say, 30 of them. Okay, then 30 upon 100, 30% is my numeric distribution. Numeric distribution is the same as outlet coverage, no difference. What is weighted distribution? Suppose these 30 outlets meet are 60% of the total sales of the market. Like suppose मार्केट में 100 पेटी का माल बिकता है and 30 outlets में 60 पेटी बिकता है. So if I cover these 30 outlets, I am actually reaching 60% of the industry. This is weighted distribution. We cover this in detail in our online course, Effective Channel Management and Go-to-Market Strategy. It's a wonderful course. It has about 20 hours of content, some 7 different case studies, and HUL is part of the case studies over there. And we got, I'm the faculty there, the core faculty, and we've got multiple industry experts who have given their analysis on various cases. We've got case studies on HUL, Dabur, Britannia, Asian Paints, and PNG, plus 2 very powerful case studies on HLL and ITC. Okay. All right. So numeric distribution, so weighted distribution has gone up. The company is focusing on focusing on the trade, and it has increased its outstandings to the trade in some manner. There's otherwise there are lots of business things that are going on. There's a minimalist acquisition, so minimalist products will start coming into the portfolio quickly. Pureit has got sorry, uh, has got divested, and ice cream is on track to the same piece. All right. So these are the 4 divisions. So that's as far as the distribution strategy is concerned. Home care division, foods, personal care. These are the 4 divisions. Different divisions face different challenges, and this is how the whole market is. Now you got within the investor presentation, you've got a whole lot of additional information about each of these 4 businesses. But okay, and individually within the drinks portfolio, there is a pricing change that is going on. So those of you who want to take up this as a project on, or, on how pricing works in this sector, this is an interesting idea to work on. And yeah, the rest of the presentation, you will find a whole lot of financial information with segment results. This is what we saw. The underlying value growth in volume growth in personal care is low single digit decline. This is what we saw. The most profitable division is the beauty and well-being division, right? Home care, most of the other divisions are at 18% to 19% profit margin. Beauty and well-being is obscenely profitable at 32% big market growth. The company's declared a dividend, and yeah, that's the idea. Okay. All right. So on that note, everybody, thanks a lot for watching this video till here. What we've tried to cover is the financial strategy, the marketing strategy, and the distribution strategy of this company. This case study is part of our online course on our FMCG courses. So have a look at the course. If you like this video, you will find a lot of interesting content over there. Okay. On that note, thanks a lot. We will cover various other companies in the course of this next 2-3 months. So follow the channel and like the video. I'll see you in the next video. This is Maneesh Konkar signing off. Thanks.